All right, folks, if you're a UK taxpayer and you've seen those two little letters BR on your tax code, well, you're not alone. My tax accountant, the well-known UK accounting firm, is here to help us decode what BR is and what it means for your hard-earned money.
Yeah, we've had a lot of questions about BR lately.
It can be a real head-scratcher, especially when you're trying to figure out if you're paying the correct amount of tax.
Yeah, definitely.
Nobody wants a surprise bill from HMRC come tax season.
Yeah.
So let's just break it down for our listeners. What does BR actually stand for?
BR stands for basic rate. It means that all of your income under this code is taxed at the basic rate of 20% in the UK.
Okay, so 20%.
The catch is you don't get your tax-free personal allowance.
Ah, so that's the thing. Normally we'd have a tax-free personal allowance of £12,570.
Exactly.
But BR just throws that out the window.
Yeah, it can be a bit of a shock to the system if you're used to having that allowance. Suddenly, every pound that you earn under BR is taxed from the get-go.
So you're telling me if I see BR on my tax code, I could be losing out on over £1,000 in tax-free earnings. No wonder people are concerned.
It's definitely something to pay attention to, and it's becoming increasingly common, especially with more people juggling side hustles, freelance gigs, or multiple pensions alongside their main income.
Wait, hold on. Multiple pensions. So this isn't just for the side hustle generation.
Yeah.
Anyone with more than one income stream could be affected by this.
Yeah, you hit the nail on the head there. Let's say you're retired and receiving your state pension. That's likely using up your personal allowance, but if you also have a private pension or a workplace pension, HMRC might slap that BR code on those additional pension payments.
So it's like they're saying, we know you've already used up your tax-free allowance somewhere else, so any extra income you get is fair game for the 20% tax.
That's a great way to put it. Yeah, it's all about HMRC simplifying things when people have income flowing in from different sources.
Okay, so we've established that BR can affect more people than we might initially think, but how widespread is this code, really? Are we talking about a handful of taxpayers or a big chunk of the UK?
Well, it's definitely not a niche thing anymore. HMRC's data shows that in the 2024-25 tax year alone, 1.3 million taxpayers were on this BR code.
Wow.
That's about 4% of all income taxpayers in the UK.
That's a lot more than I expected.
Yeah.
Seems like BR is becoming more and more relevant in this complex income landscape.
Absolutely, and it's not just about the numbers, but the variety of situations where this BR code comes into play.
Right. We've talked about side gigs and pensions, but I'm sure there are other scenarios that can trigger a BR code. Can you shed some light on those for our listeners?
Yeah, of course, one common trigger is starting a new job mid-year without providing your P45 to your new employer.
Right.
Until they receive that P45 detailing your previous income and tax deductions, HMRC might use BR as a temporary measure.
So it's like a placeholder until they can get the full picture.
Exactly.
I bet that can cause a lot of confusion and even lead to some people overpaying tax.
You're absolutely right. It's why it's so crucial to have that P45 handy when you start a new job. But there are other situations too. Sometimes taxable benefits or adjustments to your income, like company perks or overpaid allowances from a previous job, can eat into your tax-free allowance.
Oh, yeah.
And guess what? That can also trigger a BR code.
Okay. I'm starting to see now how many different ways someone could end up with this BR code on their tax return.
Yeah.
It's really important for people to understand these triggers, especially if any of these situations apply to them. Otherwise, they could be in for a bit of a shock.
I couldn't agree more. Awareness is key, but let's be honest, understanding the why behind BR is only half the battle. What people really want to know is how it actually affects their take-home pay.
You're reading my mind. We've talked about the theory behind BR, but now let's get down to the nitty-gritty. Can you give us some real-world examples of how this can impact someone's finances?
Absolutely. Let's take Sarah, for example. She's a graphic designer with a full-time job earning £30,000 a year. Her main job utilizes her personal allowance, so she's taxed under the standard 1257L code. But Sarah's got a creative spark. She also freelances on the side, bringing in an extra £10,000 a year.
Okay, so Sarah's main income is sorted. But what about that freelance cash? How does BR come into play there?
Well, since her personal allowance is already being used by her full-time job, HMRC would likely assign the BR code to her freelance income. Okay. Meaning the entire £10,000 she earns from freelancing is taxed at 20% straight away.
Ouch, that's a significant chunk of earnings going straight to the tax man. It's like she's losing out on that tax-free cushion she'd normally have.
Exactly. Instead of enjoying that tax-free allowance on her freelance earnings, Sarah ends up paying £2,000 in taxes on that income. It really highlights how BR can significantly impact someone's bottom line.
Okay, so let's shift gears for a second and look at a different scenario. What about someone who's retired and receiving multiple pensions? How would BR affect them?
Sure, let's imagine Tom, a retiree who receives a state pension and a private pension. Let's say his state pension is around $11,500 to $2 this tax year. That would most likely use up his entire personal allowance,
Leaving his private pension vulnerable to that BR code.
You got it. Let's say his private pension income is £8,000. Under BR, he would pay 20% on that whole amount.
Hold on. So even though Tom is retired, he's still losing out on a potential £1,600 because of this BR code. Seems a bit unfair.
It can feel that way, especially if you're not expecting it. This really illustrates how BR can affect people from all walks of life, not just those working multiple jobs.
Okay, so we've covered some real-life examples of how BR can affect people's earnings. But how can our listeners actually check their own tax code to make sure everything's correct?
Well, the good news is checking your tax code is easier than you might think. Your payslip is the first place to look.
Right.
It should clearly show your tax code right there on your payslip. And if you've recently switched jobs, your P45 or P60 forms will also show it.
Right, those end-of-year tax documents, those are good resources for checking.
Yeah.
What about for people who like to do things online? Is there a way to check your tax code online?
Absolutely. HMRC's online portal called the Personal Tax Account is a great tool for managing your tax affairs. You can log in using your national insurance number and you'll be able to see your current tax code.
Very handy. A lot of people prefer managing things online these days, so it's good to know there's a convenient option. But what happens if you've checked your tax code and gasp it's wrong? What steps should people take to fix that?
Well, first of all, don't panic. Contact HMRC and explain the situation.
Right.
Make sure you have some key details handy, like your national insurance number and information about your income sources.
Okay.
HMRC might ask for supporting documents like payslips, P45s, or pension statements, so it's a good idea to have those ready beforehand.
So gather those documents beforehand to help streamline the process. That makes sense. Now let's say this incorrect code has resulted in someone overpaying their taxes. Ouch. How do they go about getting a refund from HMRC?
Well, you can file a claim online through your personal tax account or by filling out a form called an R40. HMRC usually processes refunds within a reasonable amount of time.
It's good to know. What about the opposite scenario? What if the wrong code has led to someone underpaying? That sounds a little more stressful.
It can be. In this case, you'll likely need to adjust your future tax deductions to make up for the shortfall.
Right.
HMRC might issue you with a new tax code that deducts a bit more from your income each payday. This way you gradually cover the amount owed.
So it's not necessarily a lump sum payment, but a sort of payment plan spread out over time.
That's right. It's a way to manage the repayment more gradually. Now we focus on individuals so far, but let's not forget about the folks running businesses out there. How should they handle BR within their own payroll systems?
Yeah, that's a good point. Getting BR right on payroll is crucial for employers, not just for accuracy, but also to avoid potential issues with HMRC later on.
Absolutely. The first critical step for employers is to always get a P45 from every new employee.
It seems like those P45s are really important when it comes to BR.
They are crucial. A P45 provides vital information about an employee's previous employment and tax details. Without it, employers might have to default to using BR, which can then lead to errors down the line.
So being proactive and requesting those P45 from day one can save everyone a lot of hassle later on.
Exactly, and it doesn't stop there. Employers should also make use of HMRC's free PayYE tools online.
Okay.
These tools are really helpful. They help employers double-check their tax calculations and ensure accuracy. It's like a safety net.
Right. It's always good to have that extra layer of verification. Any other advice for employers to help things run smoothly?
Definitely take the time to educate your staff about BR.
Okay.
You'd be surprised how many payroll-related questions come from employees simply not understanding their tax codes.
Yeah, it all comes down to transparency and clear communication, right?
Exactly. Educating employees about BR can really reduce confusion, minimize those payroll headaches, and make the whole process much smoother for everyone.
Great advice. Okay, so we've covered how to check for errors, how to fix them, and how businesses can handle BR effectively. But are there any long-term strategies that can help people navigate BR and minimize those potential complications? You know, things they can do beyond just reacting to problems as they pop up.
Yeah, for sure. Let's look at some long-term approaches that can make living with BR more manageable. One option is to think about consolidating your income sources.
Yeah.
So if you have multiple jobs or income streams, try to see if you can streamline things a little bit
Well,
and have one primary income source if you can.
right. So instead of juggling multiple jobs or income streams, try to have one main income source.
Exactly. This can really simplify your tax situation, and it could potentially allow you to fully utilize your personal allowance on that single income stream. It's like getting that tax-free cushion back. Now, this might not be feasible for everyone, but it's something to consider.
Right. What about people who are approaching retirement or already receiving pensions? Are there any specific strategies for them?
For retirees facing BR on their pensions, careful planning is key. Delaying the payout of secondary pensions can be a good move.
Right. So if your state pension is already using up your personal allowance, strategically timing when you start receiving your other pensions could help you avoid BR.
Precisely. By delaying those payouts, you might be able to maximize the use of your personal allowance in those years when your income is lower, and this can really reduce your overall tax burden in the long run.
It's amazing how much strategic planning can help.
It really does make a difference, and for higher earners, another key strategy is filing a self-assessment tax return.
Oh, okay.
It might seem like an extra step, but it can really give you peace of mind, especially if you're dealing with BR income.
So even if you're not required to file a self-assessment, doing so voluntarily can help.
Yeah, exactly. It allows you to proactively review your income, your tax deductions, and make sure everything's aligned with what HMRC requires. Think of it as taking control of your tax destiny.
I like that. It all comes down to being proactive and informed when it comes to your taxes. All right, so we've really gone deep into this whole tax code BR thing. We've looked at what it is, how it works, and even how it can trip people up. As we wrap up this exploration, what are some key takeaways that our listeners should remember as they navigate their own tax situations?
I think the biggest takeaway is knowledge is power, especially when it comes to taxes. Understanding tax code BR and how it can impact your finances is so important. It helps you make smart decisions about your money.
Absolutely. Don't just glance at your payslip. Take the time to understand what your tax code means and why you have it. It can save you so much trouble later on.
I couldn't agree more. And here's another crucial point. HMRC isn't perfect. Mistakes can happen. So it's really your responsibility to double check your tax code and make sure it's right.
Yeah, being proactive can really pay off. It can save you time and money, not to mention a whole lot of stress. If you're ever unsure or have any questions, don't hesitate to reach out to HMRC directly. They're there to help.
Exactly. And finally, I encourage everyone to think long term. Consider how changes in your job, your income, or even your retirement plans might affect your taxes, especially when it comes to BR. Planning ahead can help you lower your tax bill and really boost your financial well-being.
It's all about being in control of your finances and not being caught off guard by a huge tax bill or unexpected refunds. Tax code BR might seem like this tiny detail on your payslip, but it can have a big impact. Stay informed, stay proactive, and remember, knowledge is your best friend in the world of taxes.
Well said. Understanding your tax code is a step toward taking control of your financial future.
This has been a really insightful look into tax code BR. Thank you so much for joining us and sharing your expertise. You've really helped us break down this complicated topic.
It's been my pleasure. Remember, understanding your tax code is a step towards a brighter financial future.
And on that note, we'll leave our listeners with one final thought. We talked about how BR works now, but how might things like the gig economy or changing tax policies in the UK affect how we use BR in the future? It's something to think about as we all navigate the ever-changing world of work and money. Until next time, stay curious and stay informed.